Hey there, future Wall Street wizards. Ever wondered how companies like Apple or Amazon became giants? It's all thanks to the stock market. Think of it like a bustling marketplace, but instead of vegetables, you're buying and selling pieces of these companies called stocks. These stocks represent your ownership in the company. Now you might be thinking, why would I want to own a tiny piece of a company? Well, as the company grows and becomes more valuable, so does your little piece of the pie. That's how people make money in the stock market. Of course, just like any market, there are risks involved. The stock market can be volatile, meaning prices can go up and down like a roller coaster. But don't worry, that's why we're here, to equip you with the knowledge to navigate this exciting world. So, buckle up and get ready to learn the basics of the stock market, where even small investments can lead to big rewards. Alright, let's break down what a stock actually is. In simple terms, a stock is like a tiny slice of ownership in a company. When you buy a stock, you're essentially becoming a shareholder, a part owner of that business. Now, there are two main types of stocks you should know about, common and preferred. Common stock is like the popular kid in school. It's the most common type of stock and gives you voting rights in company decisions. Plus, if the company does well and makes a profit, you get to share in those earnings through dividends. Think of dividends as a little thank you gift for being a loyal shareholder. On the other hand, preferred stock is like the quiet achiever. It usually doesn't come with voting rights, but it does offer something else priority. Preferred stockholders get paid dividends before common stockholders. So, if the company is facing tough times, preferred stockholders are higher up on the list to get their money. Now that you know what stocks are, let's see how this whole stock market thing actually works. Imagine a giant auction house, but instead of paintings and antiques, we're trading stocks. Buyers place bids on stocks they want to buy, and sellers set asking prices for their shares. When these prices match, boom, a trade is executed. This constant buying and selling is what makes the stock market tick. But here's the thing, you can't just walk into this auction house and start waving money around. You need a middleman, someone to connect you with the buyers and sellers. That's where stockbrokers come in. They act as your agents, executing trades on your behalf. In today's digital age, you can easily buy and sell stocks online through brokerage accounts. These platforms provide you with the tools and information you need to make informed investment decisions. Remember, knowledge is power in the stock market, so always do your research before hitting that buy button. Ready to dip your toes into the exciting world of stock market investing? The first step is to open a Demat account. Think of it like a digital locker where your stocks are stored electronically. You'll also need a trading account which is connected to your Demat account and allows you to buy and sell stocks online. Once you're all set up, it's time to do your homework. Research different companies, understand their businesses, and analyze their financial performance. Look for companies with a strong track record of growth and profitability. Remember, investing in the stock market involves risks, so it's crucial to start small and gradually increase your investments as you gain more experience and confidence. Don't be afraid to seek guidance from financial advisors or experienced investors. The key is to stay informed, be patient, and invest for the long term. The stock market can be a roller coaster ride, but with the right knowledge and approach, you can ride the waves to financial success.